Welcome to the Latin Wealth Podcast, a podcast dedicated to educating the Latino community about entrepreneurship, investing, and business.
Yo, what's going on, Latin Wealth family? Welcome to another episode to Wealth Wednesday. Super excited about today's conversation because this whole episode is going to be breaking down the basics and the fundamentals of what a stock is. We talk a lot about investing. We talk a lot about different companies, Apple, Microsoft, Nvidia, but we notice that there may be some people out there that don't know exactly what a stock is, where to find the stocks, how to invest, the very basics. So if you are this person that needs this information, or maybe you know somebody that needs this information, definitely tune in, pull out your notepad, share this episode with one other person. Again, this episode is going to be all about the basics of a stock. As always, welcome to Wealth Wednesday. I got my guy Jeremiah in the building. How you feeling today, bro?
Good to be back in live, back in session, and yeah, got a lot of information to share. This is gonna be one of those ones for him.
Yep, 100%. So let's dive right into it. So, what is a stock? We hear this term all the time. And you guys may not know what it is, but I'm going to break it down. A stock is a representation, or a stock represents ownership in a company. When you buy a stock, you purchase a small amount of the company known as a share. All right. So a share is an individual unit of a stock. For example, if you look at Apple, currently when we're recording this, the price is around 207. That is the share price of Apple. If you're wondering why companies issue stocks to raise capital for growth, operation, and other financial needs. All right, so that's kind of the basics of a stock. I'm gonna let Jeremiah add in here in a second. Lastly, a ticker symbol is a unique grouping of letters that identifies a specific company. For example, we just spoke about Apple. Apple has a ticker symbol of AAPL. So if you're looking up information about different stocks or a company, you can type in the ticker symbol to get the specific information. Oftentimes, I just go to Google, type in Apple stock price or Apple stock information, and it'll still pop up. But every company has a different ticker symbol, so just also keep that in mind.
I think that, and great, by the way, on giving the basis of what things are, because a lot of people hear shares, you hear equity, you hear all these different things, and people don't know what the difference is. That's the basis of it. I mean, and guys, at the end of the day, stocks are really just a way for companies to raise capital. Mm-hmm. Okay. And then also anyone that owns shares, they can share in the profit. Hopefully the company is doing what they need to do and that you're sharing in the profits. But the main thing is that, hey, the company needs to raise actual capital for whatever it is, projects, purchasing of different things, research and development, whatever it is. So just remember that stock's your money. It's not just going to the ether. It's going toward actual functionality for the company.
100%. I wanted to move on to how to invest in a stock. Did you have anything else before?
No.
In between? So how to invest in a stock, right? So the first thing I would recommend is setting kind of financial goals. Determine your investment objective, like a saving for retirement or earning additional income is always important. We talk about on the show a lot, like defining what your goals are, because what my goal is may not be the same for you. It may be different for Jeremiah.
Very
so
true.
Setting financial goals for yourself. Also budgeting. How much money can you afford to invest without impacting your financial security? And that can look like anything for you guys. It can be like, I only got $50 a month. Whatever that is, whatever that looks like for you, highly suggest that you budget and you start from somewhere. Anything you want to add on to that?
No, different order.
Yeah.
Financial readiness, I would say, probably is number one for me. So the budgeting and making sure that you have the proper stability to make sure that you're doing what it is that you need to do and that you have the money to be able to invest. That's number one. And then setting financial goals to make sure that you're going to reach something, that you're shooting towards something, not just out in the middle anywhere. So
for sure. And I think
goals.
Yeah, I think the third bullet point, I guess, in that second step from there is research. Doing your research, doing your due diligence about different companies and industries to make informed decisions. Very, very important that you do that. Not
Due
to
diligence.
just get your information from, some random YouTuber or something like that. You want to get your information from different, don't even just get your information from us. Get it from multiple sources.
People. Yeah. I mean, and even do that research is not just in the stocks itself, but you have to, obviously, you have to have a brokerage account to be able to manage these stocks. A brokerage account is just companies. You may have heard of companies like Fidelity, TD. There's different companies basically that allow you the ability to purchase and trade or have stock and be able to move those stock and control them. So I would even do research into the actual brokerage accounts that I'm opening and the benefits from that. So not just the companies, but what actual tool or platform I'm using to purchase the stock as well. Because maybe there's some incentives. I looked at the other day, we were talking about Robinhood. Robinhood gives you 5%. Basically, they match you up to 5% of what you invest into their platform. So you just want to look at the benefits of things of that nature. So not just the stocks, but the actual platform itself.
100%. That kind of goes into, where to invest. You mentioned Robinhood. TD Ameritrade is big. E-Trade. Do you recommend any of these platforms, or what are your thoughts about these?
So if you're a beginner, I was gonna say novice. If you're a beginner, novice person, and you're just starting out, I'm gonna tell you use Robinhood because it's a lot more friendlier. The app itself just from the colors and things like that, psychologically, they help you to be more into the app
for sure.
Versus the black and white and the different numbers and stuff. When you get a little bit deeper into it, E-Trade is cool. It's weathered a little bit. I would say go from Robinhood, and then as you transition, Fidelity is going to be one, kind of like your Swiss Army knife. You're able to trade. You're able to actually purchase stock. That's how I would transition. But starting off, Robinhood, it's on your phone. It's pretty simple. Some people use Cash App as well.
Yeah, Cash App. Yeah, that's true. Robinhood is very simple to use, very user friendly.
Yep.
I know when you purchase a stock, like there's some confetti that falls down.
Like blows. Yeah.
You get that hit of dopamine.
Yep.
So look, these are some different accounts that you can look into. Look, guys, super simple. They all have apps. Download the apps, pick one, run with it, learn about it. It's very simple to use. There's different things that you can set up. You can set up like recurring payment with Robinhood. So if you want, maybe you can't afford a $207 share of Apple right now, but maybe you can do $50, right? And you can do that reoccurring every week. So you're buying $50 worth of Apple until you hit, your target amount.
Yeah, and fractional investing is the way that everything starts, right? So you don't have to go and buy. Most people, and that's why people don't start investing. They sit and think, well, I don't have $1,000 to go get Bitcoin. I don't have whatever, right? I don't have the amount of the share. You don't have to. You can fractionally, purchase a piece of that stock where you just have half a share or 0.25 of a share. And having that is better than having nothing at all. So don't let that prevent you from doing that. And then you set that frequency. Maybe you only do, like you said, $50 a week or $100 a month. But eventually you'll get there.
Yeah, 100%. And that strategy is essentially called dollar cost averaging.
Correct.
So no matter what the price of it, whether it's low or high, if you got that 50, you're just going to invest it every single time. I want to talk about some other investment methods. So we got dollar cost averaging, we got dividend investing, we got buying and holding, we got options. Could we kind of break down, each one of those? Look, option trading, I wouldn't necessarily stay away from that in the beginning, but we'll break it down what it is though.
So let's talk about, you talked about dollar cost already. You did that, which is just setting a set amount that you're going to invest at intervals. Could be 2 weeks, a month, whatever, right? And you're going to do that, and no matter what it is, what the cost is, you're just going to do that amount. Okay, we talked about dollar cost. Let's actually talk about, I guess we could talk about holding. Purchasing and holding for long term.
Yep.
This is what most investors do, and if you notice, the majority of people that make money in the stock market, they make it over a long period of time. Yeah. Okay, this is not just 2 years, right? This is like 10 years plus, right? Even if you got Meta or Apple or something, if you look at their overall gain, right, the delta between where they were 10 years ago to now, it's crazy. So you have to hold for long term. That means don't get rid of it. Oh, it goes up, it shoots up. GameStop type stuff.
Yeah.
That's not what's happening here. These are solid companies that you're going to invest your money in. You're going to hold these for multiples of years, 5 to 10 years, right? As you said, options trading, I would not get into that. Calls and puts, we won't really even just touch on it. I'll just say that as a beginner, that's something you should stray away from. I've been in the game for probably, 16, 17 years now, and I still don't trade. Like, really? Like, yeah, I still don't trade because it's just, it doesn't fit my lifestyle.
Yeah, it's big.
I'm not going to sit around all night looking at different computer screens. I'm not going to do that. And to be honest, I'm not saying I don't believe in it. You can make a ton of money off of it, but I think it's very dangerous. And it's almost a little bit more gambling than investing.
Most people make more money buying and holding opposed to trading options.
Yeah. And I think more people lose money.
For sure.
Trading options. I think they get that rush, but I think it's dangerous. It can be dangerous if you don't know how to properly do it. But I mean, some people, options trading, they go crazy with it.
They go crazy, yeah. Talk to us about the mindset that's needed to buy and hold for the long term. Like when you buy, for example, let's just go with, I keep using Apple, 207 right now. You know, buying it for the long term and not understanding, or maybe not even, I shouldn't say understanding, but not knowing what the price is going to be 10 years from now. What's your mindset around that?
I mean, well, it goes back to number one, having delayed gratification. So I'm not just sitting and thinking about what it's going to give me right now, although the benefit of owning it is great. Like their dividends are not that great or anything, but the benefit of owning it is understanding and creating that discipline long term. I'm thinking about something that I'm gonna, give to my daughter or my son. I'm thinking about things that you're gonna give to the family, the creation of generational wealth that you're creating, right? That's more where your mind should be, not in getting rich tomorrow. That's number one. And then number two, you were talking about it earlier, like doing due diligence and looking at the companies. If you actively go in and look at, there's a trend, right? Which is just a graph. If you go back 10 years from today, they let you do that. And you can look at the growth that it's had from 10 years ago to today. Sure. And then you can kind of look at what happened between those 10 years. Like, well, what happened 10 years ago? Now it's 4 or 5 years ago, but we had the pandemic. So we've had some things that have occurred that could have tested stocks, right? So you could look at that, and then maybe you can't exactly extrapolate that, but you can kind of be like, well, how much did it grow during that time? It has the ability to grow that much here, so I could look to get relatively this type of gain, right? But
that's good.
That's just thought process of how I would sit and think about it and how I look at stocks.
100%. And I think that's a really good point that you brought up, to looking at the graph and maybe looking at like 2008, 2009, where there was something big that happened to the economy. How did the stock perform then? What happened? Was this something that pretty much hit the whole market, or was this something they recovered from? Have they recovered from it? Going back to 2020 as well, you can do the same thing.
Yep. So, I mean, black swan events are always going to test the economic market, right? And it happens. You have 1 to 2 every 20 years, right? Or every 10 to 15 years, actually. I mean, you could look at the pockets. 2001, there was .com, and, obviously 9/11. Then you progress to the recession that's in 2008, 2009. We know what happened there. Boom, you got COVID. So it's like every single, right? You can almost bet on it. Every 10 to 15 years, there's going to be a black swan event. Something happened, a war or something, right? And then how does the market react to that?
For sure.
So the people that get rich, I want to say this, the people that get rich are the people that can see these things and understand it's going to happen again, and they have cash on hand, or they've set themselves up to be prepared, right, when it comes time to make moves necessary. Let's say stocks drop significantly. Those people have some savings, or they have some dividends they've been earning, and they utilize that to go and buy stocks when they're low. Yeah. Just, just a little bit of a thought process of how people,
people, I mean, they see it. They see investing in companies the way we see like investing in
materialistic. Yeah.
Oh, it's on sale.
Yeah. Oh, I'm gonna go get these Jordans because it's 110 instead of 210. And they're like, okay, so I'm gonna go get a piece of this company because it's 125 and the usual price is 310.
Yep. Crazy. You mentioned dividends investing. Could we hit on that a little bit?
So dividends is when you invest into a company, and based upon the amount of shares that you have and the profits that that company gains, they're going to give you or pay you a piece of those profits, right? So if the company is obviously doing extremely well, they have a dividend rate, and it may be $1.25 per share, right? Now Costco did something crazy. I think it was last year. It was like $11 per share, something wild. Like they would, which it was a play or whatever, but. So give you 75% per share. So let's say that you have 20 shares, right? You're just basically, they'll pay you 75% per that share. You'll get a check or a deposit, right, for that amount. So however many shares that you have, that's why dollar cost averaging is really important, because you're starting to purchase more shares. And if it's a dividend company, that means they pay you more back.
Yeah.
Not something you're going to be able to make a living off of unless you have a massive amount of shares, right?
It's something coming in.
But it's something.
Yeah, it's something. And most people just take those dividend shares, the profits, and reinvest it.
Yeah.
Dope. So we got a couple more to hit on. We hit on what a stock is, how to invest in a stock, where to invest. I know we kind of mentioned, keys to stock picking and like your thought process, but I want to kind of break down some other thoughts to go into, maybe looking at like the company's financials, their earning and growth, their, valuation ratios. Like, what are some of the things that you look at?
I mean, let's be honest. When it comes to, we're talking about stock 101 right here. I'm not going to go that deep for people. I'll keep it pretty surface. Fundamental analysis is just look at the company financial health. What does that mean? Are they making money? Right? And like, how do I know that? Well, if you go over and look at the actual stock prices, like we said on that trend, it'll either be red or green. Green is obviously good. They're making money. Red is not so good, right? Are they making money? And then you can even go in Google, type in the company's name and put Apple's financials for 2023. And it'll bring you up, and it literally will tell you, because they're publicly listed, it'll tell you everything that they did with their money and how the company performed. That's number one. So that's like fundamental analysis. It's just making sure that you can go check on the company and see how they're doing, financial health. Number two, you could do a technical analysis, which is something that I probably dive more into, which is the charts and things like that, right? Looking at their trends, how have they performed? Oh, when this happened, did the company respond accordingly? What is their CEO doing? Who is he? Like, that's more technical. But yeah, you can dive into that as well. And then, of course, diversification. Even within one company, you can there's different diversifications and things that you could do, because there's like GE, perfect example. GE's split up into like 5 different companies, and you may not know the tickers for all of them, but if you go and check out GE, it could lead you to the subsidiaries that you can go and invest in as well. And the overall parent company is going to make money, then that helps with all the subsidiaries.
100%. Yeah, again, we're talking stocks 101. So look, oftentimes you want to run with the big companies that are already successful. Yeah. I know it's not the sexiest thing to do. You want to maybe invest in a penny stock that you think get a 10x.
Don't do it.
But it's a penny stock for a reason, right? Just run with the big dog, run with the big companies, run with like the top 3 biggest companies until you get the understanding of how to invest in companies, until you learn how to look at charts and whatnot. Then you can maybe start diversifying and, going into other companies.
Yeah, I feel like, because we were talking about, making that list or whatever, make a list. There's 5 different stocks or companies that you're interested in. I feel like if you're interested in a company, that's going to help you to be more active, looking to see how they're doing, how they're performing, and then you'll actively want to put money in them, or you'll say, "Nah, I'm not going to put any more money into them," and things like that. Nike, right? Google, Apple, Microsoft, Nvidia. You just can't go wrong with that.
Can't go wrong. Yeah.
And like, well, I don't know anything about AI. You don't really got to know that much about AI to know that it's obviously everywhere and it's not stopping. It's not a bubble. This is going to keep growing. So certain things you just kind of, because you were like, until you understand, you may never understand AI fully. True. But you need to put money into it because it's freaking running the world. So
and you just need to. At least they make the chips for these different AI platforms. That's all you need to really know.
That's all you need to know.
Yeah, 100%. I want to hit on like when to take profit. So when, how, Or what are your thoughts on this?
Yeah, well, I mean, that depends on the person, right? Because it's like, that's case dependent. Because I could tell you like, oh, hold for a minimal of 5 years. Because there's certain stocks that you're going to select that they're like 2 to 5 year selections. Okay. And then you're going to get what you can out of it. You're going to see them grow, and then you'll probably sell and move into other stocks, long-term holds, which are like 10 plus years. A lot of times what I'll say is take profit as needed for you, but understand that if you're dipping early into one of those realms, like if it's a year and a half and you know that this stock probably should have waited 5 years, you know you're not going to get the profit that you need. And you're actually taking yourself out of the game, right? When you take money out of that stock, then now you're on the bench and you're not putting yourself in the game. So just understand that you're not going to get the return or have the opportunity of growth when you're pulling that money out in that section. And if it's like a 10-year and you're pulling out in 3 or 4 years, then same thing. So just understand that you could take profits whenever you choose, but the best way to do it is to wait the full maturation cycle of those stocks and just sit and wait for that, because then the money's going to grow and you'd actually have a bigger profit, more to work with in case you, whatever it is that you're doing.
You mentioned the maturation cycle. Can you break that down? Yeah.
So that's the amount of time that someone basically gives a company or a stock to see the full maturation, so the full price jump of that stock. A company does an initial public offering, they start off right, and from that point moving forward, what is the maturation cycle? There are times like with Apple, right now, it's probably in a 5-year maturation, and that's just based off them and the stuff that they've come out with. It's going to take time to adapt. You want to see the way that responds. They're coming off a couple of losses, right? NVIDIA, they have a 2.5-year maturation.
But how do you get the number, the 2.5 years?
How do they get it?
Yeah,
that's based.
They put it out?
No, it's based on the sales cycle.
Okay,
so you can go and actively look up this stuff. Like if you have a brokerage, or if you like, you can just type it in Google, and I mean, there's different experts that'll give different numbers, but fair. And you can average those if you want.
Yeah,
but a lot of it is based upon the actual what that company's doing. Like NVIDIA has a shorter one because of the amount of growth that they have, and they're actively in the AI cycle, and they're coming out with new products basically dang near every year, research-wise. Apple, based off the way they've been performing and the fact that they've had a couple of L's, that maturation is probably just going to be a little bit longer.
A little longer, yeah. Makes sense.
I mean, Microsoft's was like, I think it was like 10 years. And it came full, and it actively like came full cycle, because now we see what they're doing with OpenAI and stuff that. So yeah,
it's interesting. Okay, so again, we hit on what a stock is, how to invest in a stock, where to invest, keys to stock picking, how to take profits, and then I think the last step, unless you got some other things, I think your favorite. Due diligence, continuing the education, staying informed. We speak about it often, all the time throughout this episode. Talk to us, man. Due diligence.
You want to get things that are going to be actively in your sight and that you're going to pay attention to. So I'm a big proponent or a big supporter of apps, because we're always on our phone. So sure. Yahoo Finance, even if you want to do CNBC, some people, I don't like to get into some of the news.
What about Bloomberg?
Bloomberg is good. Bloomberg is solid on business. I mean, they're good on stock as well, but I like more of their coverage of business. Wall Street Journal is all stocks.
Yeah.
Wall Street Journal, Yahoo Finance, Bloomberg, routers, the way however you say that. Them as well.
100%.
All apps that you can actively keep on your phone, and it'll actively send you like notifications for you to pay attention to stuff. And you can even tag or create favorites within the apps, and they'll send you information about those specific companies.
100%. I think just to add on 2 more, asking questions to different people. So whether it's on social media, whatever, I would say just shoot somebody a DM. You never know who's going to respond. If you have a question or a thought about something, a lot of these platforms, they go live. You can ask a question on there.
You think you got to watch that though?
Do you think Oh, for sure.
Yeah.
What I was going to say to follow up with that, like going back to what I stated earlier, you can't take any of these platforms for face value. Like, I mean, We even seen, I think, an article by where they were talking. Man, what were they talking about? I think it was Yahoo Finance that was talking about fasting. Somebody was talking about fasting.
Yeah.
Basically saying how it wasn't good for us.
It wasn't good for you.
And so
Yeah.
that's a great example of, and it was during Ramadan, which was crazy.
I don't think they got the social.
No, they definitely didn't. But just articles like that, information like that, even asking questions, take the information and ask somebody else, or like, I like to like essentially find the average.
Sure.
Look at all these different articles, platforms, and come to my own conclusion, right? That's my average, I would say. And I think that the second thing is if you can get around like-minded people or in some type of community where you can bounce ideas, ask questions. I ask Jeremiah questions all the time. Have somebody else ask questions. And again, I come to my own conclusion from that.
I would say even get in elevated communities.
For sure.
Like-minded will keep you where you're at. And that's just me. If you're the smartest person in the room, you're probably in the wrong room. Or if everyone's just as smart as you, then you're probably still in the wrong room. So I would say get into some elevated situations where you feel, hate to say it, where you feel dumb. Yeah. You should feel dumb in that room. So that way you can actually learn and level up. So those people are sharpening you so you can kind of, get that thought process up.
Yeah. And mind you, those rooms, you may need to invest in yourself.
I agree.
You may need to make an investment to be in the room.
It costs, man. Masterminds, these type of things, you're not going to get in those rooms most of the time for free. Mm-hmm. So I agree.
100%. Stock 101. Hopefully you guys learned something from this episode. I really believe you can watch this episode. You can go back to the previous episode and, hopefully things will make a lot more sense or even moving forward for you guys. If you guys enjoyed this episode, please subscribe, leave a comment, review, share it with somebody. It would mean the world to us if you can help us out and continue to grow this platform. It's the Latin Wealth family. We'll catch you guys in the next one. Peace.
Peace, guys.